It's a brutal market out there. No doubt about it. Flash crashes in stocks, in cryptocurrencies, in commodities, in the dollar. I mean, it is 2022, 2020, 2008, 2009 out there. However, the economic situation is not as dire as it was back then. Short term, we're massively oversold. Relief rally is coming, but with the algorithms, nobody can really predict how high or low things go. So I prefer to position myself for a little longer swing trades. So I'm going to give you my number one long swing trade and my number one short swing trade opportunity in the market right now.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
All right, let's start looking at the market overall and how things are going. It's not great, but we need to look at it. So S&P 500, real easy and really quickly to see. We have a complete shift, bullish to bearish. Bears are in control now. Why is that? Midterm uptrend broken. We are below the 200. As you can see, the last time we were below the 200 for a longer time, 2022, we all know the bear market of 2022, and then we've basically been above it for almost the entire time, except for a couple of times where we had fake breakouts below it. So this is where we are. We made a lower low. We basically closed this gap from May 2024. We are massively oversold. Look at the RSI down here. Look where it is right now, around like 24-ish. Yeah. So we have to go back. Oh, we still have to go back. There it is. All the way to the very bottom, close to the bottom of the 2022 bear market to get to an RSI reading. So let's look what happened when the RSI was that low, which it was only once, or it was close. So here we go. We were here. Rally here. Rally, then we went down, had a fake breakout, and then obviously big time rally. Here, small relief rally, and then obviously a monster one. Here, big one. Here, nice rally. And then even a couple of weeks ago, relief rally as well. So obviously, the possibilities and the probabilities are extremely high that we're going to get a relief rally. How high will this go? Nobody knows. Because again, it's the algos that are making the moves very short term. That's why I am not a big fan. Now, NASDAQ looks almost exactly the same. I don't need to talk about it very much. The only difference really is don't forget to look at the long-term trends, right? So we reached the midpoint. We're actually below it a little bit, but we're kind of around the midpoint of this monster uptrend since 2020. Could we go to the lower end right here? Yeah, we could. I've pointed this out before, around 14,000, 14,200. That's rough, but we'll see where this goes. Most important thing, again, bears are in control, but short-term relief rally is coming. If you have shorts, I would close them out right now. Bitcoin held up well at the end of last week and then broke down over the weekend. Doesn't look good, but it is recovering a little bit because it hit this purple support zone right here, almost to the T, which is the old all-time high. That's nice. However, we made a new low, as you can see. Lower low, lower low, lower low. Let's see where it closes, but probability high that it's going to be lower low on the close as well. We're below the 200. Downtrend still intact. I can see us testing this uptrend here. For the cryptos, not great. Now, let's compare this chart right here, massively oversold RSI, below the 200, uptrends broken, and look at the GDX, the gold miners ETFs. Look at this. It looks completely different. We're above the 200. Yeah, we sold off, but the RSI is nearly as oversold as it is in the S&P 500 or the NASDAQ. We are still in the uptrend, right? We're just basically correcting this overexcitement phase right here. We're even above this former resistance, now support zone. I mean, you want to know where the bull markets are. This is the bull market. The gold mining stocks, I've told you this before. I saw this in Zurich. I'll talk about Zurich in one of the next videos again. Institutional money is flowing in. Why? Because with the higher gold prices above 2,800, they can calculate out pretty solid what the corporations will earn, and it's much more predictable than it is for AI or Nike, consumer goods with all the tariffs right now. And that has value. That has value to institutional money. Now, could we go down all the way to the lower end of the uptrend channel, the 200? Absolutely. Would that be healthy? Absolutely. Would I be a buyer if this happens? Yes, I would, with both hands. So right now, do we need to jump in here? If you don't have any exposure, I would see if we get like a dip on Monday in the overall market that brings down the mining stocks short term, I would open up a position. But really this area right here, this is the area where we want to look above the 200, right? Getting back to it, getting close to it. Anything between 40 to around 30, 38.50, that is a really good area to get into the mining stocks because they clearly look way, way better than the overall market. And we need to take these clues. And again, we know once the panic settles down, the big money is starting to look at the different sectors. It will flow into the sectors that are holding up well. The mining stocks are holding up well. And let's not forget, and this is important, the mining stocks are tiny compared to big tech or the big S&P 500 companies, old economy companies, right? The biggest mining stock in the world right now is Agnico Eagle Mines, and their market cap is about $54 billion. That's nothing. So even small institutional inflows can really move the mining market. In the GDXJ, for the junior producers, the biggest company is Alamos Gold, which, by the way, gave a fantastic presentation in Zurich. And I talked to the management afterwards, and it's very impressive. They're the biggest stock in the GDXJ. Their mining cap is 11 billion. So this is the interesting part, right? The Max 7 stocks, one of the problems is they need massive, massive inflows to move because the companies are so big. And now that the market has turned and we have the outflows, all the Max 7 stocks getting hit. The mining stocks, they are small. They don't need that much inflows in order to move higher. And the higher they move, the more money they're going to attract because that's where the trend following money is going to go. So that's my long idea. Now let's get to the short idea, and that is obviously oil. Now oil is interesting. I told you on Friday, wow, we're breaking to the downside out of this triangle formation. You're familiar with it. I told you this is going to be one of the big trades for the coming month, and it's setting up to be exactly that way. Typical market too. Look at this, right? Bull trap in January, beautifully done. And we broke down another bull trap right before the breakdown. The institutions, they know how to do it and how to get the dumb money into the wrong side. So here's the situation. We're massively oversold, as you can see in the RSI. Is a bounce upcoming? Absolutely. We'll see how far it can go, right? Bears are in control now, so we'll see. On Friday, this is interesting, they pushed the oil price back into the support zone. This shows how significant the support zone is. Today we're below it. So this is actually not the confirmation day today because we didn't close below the support zone, right? This would be the first day to be below the support zone. So we know what's going to happen if the breakdown to the downside is confirmed. Excuse me. Our price target then is this next support zone. Before that, we will probably stop around 52 to 50. There's a small zone right here, fine. But this is the big one. This is the target zone now, and we know what it is. It's 42, 43, all the way down to 35, 34. Middle zone is around 36 to 38. I know this sounds crazy, but that's what the charts tell us. So how do we play this? First, we need to see if we're really breaking down, right? Or if this is a fake out like we have seen here and here just on the downside. So what I will do is I will wait this out. I know a rebound is coming in oil because you can see how oversold we are. I assume it'll take us at least to the midpoint, to this area right here. And then I'll see how oil will behave. Ideally, I want to see a quick run up to this zone where we now have two factors together, the downtrend and the upper end of the support zone. And then if we get a turnaround sign to the downside, then you go short because that way you have the best risk-reward ratio, right? There's no reason to go short right here. If we miss it, we miss it, right? But with a trend, this oil short will play out over weeks and probably months. So we have time and we can wait for good prices. It is likely we will hit at least the midpoint, and then again we'll see how we behave. Here, this area has been good support, as you can see here and here in the past, as well as in 2023. So this is a big area. I will wait till we run up to about 65. Then we'll see how strong is the overall market, how strong is oil. Ideally, we get a short in around this area, right? Retest the downtrend, probably because this trend is now on everybody's mind that's in the oil market. We'll probably either overshoot a little bit to the upside, unlikely, or stop before testing it, more likely, all right? We'll probably not get an exact test. And that stop could very likely be the upper end of the support channel. And then if we get some signals that the stock, that oil will go down, that will be the ideal entry point because then we have the best risk-reward ratio. That's it for today. Talk to you on Wednesday. Have a good start to the new week. Talk to you later. Bye-bye.